Hello and welcome to my next video in my general accounting series. This video is going to be looking over one example on income statements. Alright, so Carla's company, The Magic Fix, collected $25,000 in consulting fees by November 30th. Okay, so she had to pay $5,000 to her one employee, $500 for telephone, $3,000 for her rent, $750 for utilities, $1,000 for other miscellaneous expenses, and she also had to pay $7,000 for dividends for the entire month of November. And her company has been in business for the entire year, and she has a total of $52,250 in retained earnings. Okay, for those of you who want to solve this on your own, go ahead and pause the video and write it all out. For those of you who want the explanation, just keep listening because I'm about to lay it down for you. Alright, first, what are we trying to solve here? We're trying to make an income statement, right? So let's remember that we don't need, for an income statement, we don't need dividends and we don't need retained earnings. All we need are her total revenues and her total expenses. Okay? So if we look here, she had $25,000 in consulting fees that she collected. So if it looks to me that that's her only revenue, that $25,000, the next she had to pay $5,000 for employees, $500 for telephones, $3,000 for rent, $750 for utilities, $1,000 for miscellaneous expenses. Now, if you guys remember correctly, if you have forgotten, is that dividends, remember, are not expenses. Okay, they're counted separately for expenses. And if you've watched my previous videos, then you know that the reason that dividends and expenses are counted separately is because for expenses, you're using that money, you're paying that money to generate a revenue. For instance, in this example, the Magic Fix, Carla, the only reason she collected that much in consulting fees is because she had a telephone. It's because she had an employee. It's because she was able to rent out a place for business. She used all that money to generate the money that she earned. Now, dividends, on the other hand, are dividends that you just pay to the owners, pay to the people who own the company. So, for instance, I guess if Carla is the only owner of this company, then she decided that her value as the owner was worth $7,000. Now, that $7,000 in dividends didn't generate her any money. It was generated after she decided to pay dividends after she had already generated that amount of money, after she already generated the $25,000. That's why we don't include dividends as an expense. Now, the reason we don't include retained earnings in the income statement is because that has nothing to do with the revenues or expenses. Retained earnings are just money that you leave in the business. So Carla, granted, she could use that money to, say, buy another building or hire another employee. Does that generate income eventually because she's using that to make more expenses? Yes. But is that money being used right now for expenses? Is she expending that money on something right now? No, it's just money that she has available to use. So it's not worth anything in the income statement. So here's the correct income statement. This is for all of you guys who decided to go off and make your own income statement, or for all of you guys who decided to stay. As you can see, I have the consulting fees counted under revenues, and that gets us a total revenues of $25,000. Next, you can see my expenses clearly laid out. Salaries, telephone, rent, utilities, miscellaneous, you name it, it's there. Next is the total expenses. One of the things that I want to just reiterate here for you guys, if it's if it's a word, if it's something that's just, I guess, defines it in a way that everybody should understand without using money, a word, for instance, the more generalized it is, like, for instance, total revenues and revenues, it's not indented. So if the more general a word is, it's not indented if it's generalized. Now, as you can see here, under this expenses tab, we have salaries, telephone, rent, utilities, miscellaneous. All of these accounts, these separate accounts, make up the expense account. But they individually are not as important. They're not as generalized. They're more specific than the expense account. So that's why they're indented. That's the shows the clear. I guess that's what differentiates these indented tabs compared to this overall expense tab. Now, if we look over here on where the money is, where the actual dollar denotations of them are, we can see that the $5,000 for salaries, the $500 for telephone, the $3,000 for rent, the $750 for utilities, the $1,000 for miscellaneous, we can see that it's left. It's on the left column compared to the total expenses, which is $10,250. It's more left than the total expenses. Why is that, you ask? Well, again, they're less generalized than the total expenses. So you have to show that they're different, that they're different than the total expenses, because they show less information. Or they don't show less information, they show more specific information. They show a different kind of information than the total expenses does. Now, if you remember, how do we get net income? Well, we have our total revenues, $25,000, minus our total expenses, which is $10,250, and that equals $14,750. Now, if you guys have any other questions on income statements, please direct message me or leave a comment on the video. I am more than happy to help, and I have plenty of time. Thank you very much. This has been another accounting video.